The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Brent in Martinez, California. Hey, Brent, what's going on?
How you doing today, Tom?
I'm doing great, man. You having a good day out there?
I am, thank you. I was really just commenting on the fact that I'm really enjoying the new format with you being there when the market's still open. You've assembled a great group of people. They're all great technicians. I'm just so glad that I first caught you on the radio with your little tiger growl. I'm like, who is this guy? And it got my attention, and it's really made a positive change in my life.
You're awesome, man. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. And for all you folks in the Northeast, stay warm and stay safe, because I know New York didn't get hit, but Boston's still getting hit. My daughter just sent me a picture, and snow is up there, and it's still snowing. Pretty amazing. This quote's by James Gardner. Believe in yourself and everything you can be. Market-wise, let's take a look at it out here. We have the Dow Industrials down 230, NASDAQ off 63, S&Ps are off 22. Gold contract trading up $13.60 at $1,293 an ounce. Silver up 10 cents at $18.08 an ounce. Platinum up 11 at $1,263 an ounce. Copper down 8 pennies at $2.46 a pound. Light sweet crude up 84 cents, trading out at $45.98 a barrel. Bonds, you have the 10-year up 4 ticks, 129.20. The 30-year down 3 at 149.16. We're going to go back to those because those are up bigger, a lot bigger today. We'll see what that volume characteristic is. King dollar. King dollar down 835 ticks at 94.28. Market can't stand King dollar coming lower, folks. Euro up 134, trading at 113.73, and the yen is down 65 at 117.81. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&P futures, what do we have? Okay, so check it out. We'll put this on a 10-minute first. Right now, we're trading at 2030.75. Low out here today was 2013.25. What we have, folks, is that we do have an expansion of volume as we're getting into these lows. We'll see what the next hour brings. Intraday out here, what we have as we are coming into the close out here. Let me just pull this back. Oh, there she goes. We'll put this on a 10-minute chart intraday. So what we have out here is this. Let's get the volume. There we go. Okay, so what we have intraday is this. We hit a low out here of this 2013, and the high of that low is 2018. Right now you're at 2031. Bottom line is that you're going to see as we come into this close out here, there's going to be more selling pressure as we come into this close. What we've had right off the bat is that you had a market that went south, number one, had some force behind it. If we go take a look at the Dow Industrials, who's bringing the Dow south, these are big numbers, folks. And what has happened in the marketplace in particular is this. We've been talking about the October 15th swing low for a long time. Many of the equities have already hit it. A lot of them have broken it. Well, what you had out here today is that these large caps, they've just taken it apart. If we go over to Microsoft first, we take a look at Microsoft. Microsoft's down 10%. That's almost unheard of. Microsoft right now is trading, we put this, it's down $4.02. It's done 34 million shares. And guess where it's going? No, where it is. Okay, we're 42.98. 42.22 was the swing low, the high volume swing low. This is blowing the high volume swing low away. Microsoft, folks, okay, is going to basically, you have the first gap that's happening in Microsoft. It hit 42.11 today. It's at 42.98 right now. And the way that Microsoft is set up right now, she's going to come all the way back, more than likely to 37. And 37 is, if we put this on a monthly basis, you're going to see 37 is where she broke out from just a few months ago. Well, not a few months ago. Let's see, November of 2013. It's a problem. It's a big problem. We go take a look at my point here, and get the point, is October 15th. Whatever equities you have on October 15th, the market's going after them, folks, okay? You're the high volume low at October 15th, get ready to have it go after it. We'll see whether it's going to take it out or not, but it's going after it. Procter & Gamble, PG. We take a look at PG. What did PG do out here? PG right now, there she is. PG is at 86.45. That little baby also has volume on the way down. Right now, we've traded 11 million shares. It's down $3.13. That's huge volume, actually. Okay, so this is going to be interesting. This is why. 2013, it's not the end of the world. What you have with Procter & Gamble is this. If I put this on a weekly basis, you had hit the high. The high we hit on a weekly basis was 93.89. You did that in 18 million shares. You know how many shares we've already done in 2 days, folks? We've already done 20 million shares. What is that? That's volume off a high. Volume off a high is vicious, okay? What happens with volume off a high, technically, is that you get a much larger correction, in fact, than normal. That's the first part. Fundamentally, what that is that that's monster funds getting out of the equity. So we'll see where this shakes out, but Procter & Gamble right now is at that 86 level, and 79 is the next stop. Once it actually gets inside 85, you get inside that 85, 79's game, but guess what? That's a stock that's going to have a big problem. If we go inside the Dow Industrials and you take a look at inside the Dow Industrials, Microsoft is the leader on the way down. Next is Caterpillar. So we take a look at Caterpillar. Caterpillar also getting toasted, roasted, all of the above. Caterpillar right now is down $6, which that's almost 10%. You're trading out at $80. Caterpillar is a monster ABC structure on the way down. Your A point on Caterpillar is 102. Your B is 83, so you're talking about $19. Your C is 87, so you got, 67? 68. That's where Caterpillar wants to run to. That's a nasty move on the downside. If we take a look at, look what's sticking out here, 68. Man, this is wild. So check this out. If you're watching Tiger TV right now, the October 2011, it's a high volume swing low. It's $67.54. That's where this is going. Big problem. Big problem. And it's not the only problem in the marketplace, folks. What you have there, you talk about sector rotation, you hear people talk about sector rotation. It's sector rotation on the way down, not on the way up. Intel, we go take a look at Intel. Intel's giving up $1.39 out here today. And let's see. And they're getting out of Intel with volume also. We take a look at this is getting intriguing. So Intel, what's Intel going after? We know what's going after. October 15th swing low, $29. Right now we're at $34.40. That's the third laggard inside the Dow Industrials, and then you get Procter & Gamble. Procter & Gamble, bottom line, a lot lower price. We go take a look at the NDX 100, and inside the NDX 100, what we're going to have, and this is where Microsoft comes to play in a big way. That was the largest mover inside the Dow on the way down, also inside the NDX 100. Second out here was American Airlines. So if we take a look at AAL, American Airlines, let's see what she's doing out here. And, of course, Apple's coming with their numbers after the close. So American Airlines, that's no big deal. It's down 240, but guess what? The volume's not even that high. American's not going to get crushed. We take a look at MU, okay? Micron Technology, that's down $1.35. We know what she's going after. I can just get a button and just keep hitting that button every time that we start looking at these equities. So Micron, folks, is off a high of $36. We've come down. We're at 29 right now, and the high volume low is 26. So that's where that baby is going. Now let's go. This is where it's going to be interesting. So check this out. Let's go over to the IBB. The reason for the IBB is this. This is the biotech index. Now, the biotechs, folks, I couldn't say it's I can say it's almost a consistent basis. When you have markets that go dramatically higher, it seems, in my experience, that the biotechs are always the most explosive on the top side and always the last ones to fall apart. It hasn't fell apart yet, but guess what? Give it a few more days. And we just may have to just give it till tomorrow morning because I believe Amgen's coming out with numbers. No, is this today, the 27th? Hey, listen, we can give it a few minutes. Is that 27th? Might be. It is. We'll come right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Dow Industrials right now are off 265. S&Ps are, where is she? Okay, so S&Ps are down 27. You get the NASDAQ off 74. And what you're going to see out here, if we when we bring these S&Ps up, folks, you're going to see intensified selling as we come into this close. The bottom line is that let's put this on a 10-minute basis. What you're going to see here, you get a day like today, and you're coming into the close, you get a nice bounce. There's no doubt that each and every bounce has got bought, and until it's not. What we have had on a continual basis, and you can see this in the very large stocks. Bottom line is that you get large operators getting out of stocks. We've had distribution happening, but your biggest deal out here, that's the cleanest deal, bottom line, is the high volume low of October 15th. We've already had a slew of equities basically get into it and take it out. You think the rest of them aren't going to go there? It's not how markets work, folks. Now let's go over to our man, Mr. Basil Chapman at the Chapman Wave. And don't forget, folks, Basil has an outstanding newsletter. Get it 30 days, absolutely free. The way you do it, come to TFNN. You go to newsletters, trading newsletters. You see the opening call right there. You can test drive it right here, right now. And, of course, don't forget, every trading day, 11 to 12 Eastern Standard Time. It doesn't matter whether there's 3 feet of snow in Boston or 20 feet of snow in Boston. Guess what? He's in Newton. He's surrounded by the sun, okay? And nothing can hit Basil Chapman's studio. Basil Chapman, what's going on?
Hi, Tom. How are you?
And you know what? Hey, I have my daughter doesn't live far from you, and I got a picture, so I know how much snow you have outside, and it's a lot of snow.
With the wind drift, it was a lot of snow. It was 2 feet or more in some places. And what's interesting, it was actually quite light snow.
I know. That's pretty cool. That's awesome.
It was. That's great.
Yeah, it's nice and fluffy snow.
That's well.
Just like this fluffy market.
Yeah, coming down like the market. So this is very interesting. You know what? I've been speaking to you about this pattern since December. And look what's happened. You've got the Dow at 17,067 on the 16th of December. And the Dow goes up to 18,103 on the 26th of December. And what we've had is a series of lower highs, but also basically kind of higher highs. And we've got the 17,243 low that was made just the other day on the 16th. And today's low was 17,288. So what's happening is, although the market hasn't broken down in price, there's been deterioration, and each rally hasn't been able to be sustained. And yet, as you said just a moment ago, there have been buyers coming in. And what I thought was fascinating, because we'll know by the end of the day, I've got the IBB here, but I'm going to actually go to United Technologies, which just up until 3 days ago was at all-time highs, looking really good in the monthly chart, in the weekly chart. I have it as a peak C, and then the daily. And then out of the blue last night, they come out and they got this, it was a lousy outlook, but I think a great deal of it was part of the dollar. That currency is really impacting a number of Dow stocks, and yet look how it came back. It went this morning. UTX, United Technologies, for me, it's a pretty important Dow stock that I look at. GE and UTX, the United Technologies. It went all the way down to 115, and now it's up at 119. So what we're really looking at, and I think that this just sums up the picture beautifully, is that there are still buyers. And you spoke about a rotation. I've been talking about a rotation for a while, but I think you pinpointed, I had it in my mind and I couldn't get it out. I didn't feel that I got it out clearly enough. You pinpointed it. You said it's a correction, but on the way down.
That's what it seems like. I mean, you can look at and you know what's amazing, Basil, there's no doubting, folks, is that, the S&P is still really high and the Dow's high. But guess what? People are opening up their portfolios and they're freaked out. Because there's many stocks, okay, that are not only down, but they're down like 20 or 30%.
And that exactly, and this is part of the, we're both talking about the IBB. So let me just finish this. You've got UTX, you've got DuPont, which I think is also part of currency play. But in there, I was already getting some kind of a sell signal in the weekly and the daily, not so much in the monthly, but it is still holding really well. It's at 73. The all-time high is back at 75. I just want to double check. I said all-time high. Yes, the all-time high is at 75. So it's only a couple of points. You see the monthly chart. And then you spoke about Microsoft. Now, this is really interesting. First of all, I never understood quite why Microsoft was going up so well. After all, it really is an old fuddy-duddy company, but I suppose they're doing something right. But my monthly chart says F. That's usually a signal to say be real careful. My weekly says at 50.05, that's a peak F, and the daily is already given a sell signal. So you are absolutely correct. So when I'm talking about consolidations, a high-level consolidation in some sectors means that, like the dollar could have a high-level consolidation. We don't know yet, but it's on its way up. And so far, there are no real weekly or monthly sell signals yet. The daily's getting a little bit toppy. So we'll see if it's going to stay in a trading band and then trying to make new highs, or whether it's going to come down. But in a stock like a Microsoft, this is on the way down. So any rallies should fail. So what's really important, you spoke about the IBB. So the IB trading now down $1.11 at 326.89 with a couple more of the very big biotech. This is the iShare Nasdaq Biotechnology ETF. IBB made an all-time high today.
Yes.
That was at 329.20. Well, on my 120-minute chart, I've got a technique that I use where it went to a peak C and then a C1, C2, but it needed the D and it went to D today.
Oh, that's a beautiful thing. I'm going to sell it right now.
So what we're looking at is that if Amgen, even if it spikes overnight tomorrow, we want the print, not what it happens overnight. But
sure, right.
If Amgen and a couple of the other biotechs, let me see if I can recall which other. Well, I think there are another two coming out over the next.
Illumina's coming out. Illumina's coming out right tonight, I think. Yeah.
So if they start to deteriorate, then we might see finally the IBB, the Nasdaq biotech sector, actually it doesn't have to be Nasdaq, but it's the biotech sector, start to pull back, which it hasn't done. Every time it's pulled back, fund managers have been rewarded by buying it, and they've been correct. My shorter term work says that thesis is starting to wear thin. But I also have a trouble here because my weekly chart is only in length C. So it doesn't mean that you can't have a pretty decent pullback, and then maybe in February you have one more spike, and then I think you're in real trouble. But this is the stage where I think it's becoming extremely selective. It's becoming extremely selective right through the market. And even if there's what I call a rogue wave spike to Dow 18104 to get that leg D in the weekly, this is... You can tell. I mean, we spoke about this back in December. I said, January, I'm expecting a lot of whippiness. This is really whippiness. This is not the price of 2008, because there we were seeing 800, 1,000 points, 1,500 points intraday swings. But this is really close. You've had many hundreds of points up and down. I can understand why investors are starting to say, hey, this is getting dangerous. This is not.
You know, it's interesting, though, Basil, right? At first, I didn't think we could get that type of movement, right? After the last couple trades, we're going to get a 500 down day. But you know why? We're way too far away from that October 15th swing low. And it's just going to be wild watching it trade out, man. But you see what I'm saying? It's just crazy. Hey, man, have a great one. Have a safe one. Look forward to the show tomorrow.
Thank you very much, Tom.
Stay right there, folks. Come right back.
Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow Industrials are down 260. You get the NASDAQ off 70. S&Ps are off 26. And, coming into the close out here, you have 25 minutes, and that's a long time when you get a down market like this, folks. If we take a look at the S&P futures out here, we bring these up, and what you're going to see is that this last bar coming down, you got some selling into this bar. We put this up on a 10-minute basis, and there she goes. Spread this out a little for you. What you're going to see is the when we did this counter trend bounce and you got up to the 2037, we got into that level with 36,000 contracts. Well, 36,000 was going against 116,000. When we just broke down, which the S&Ps just went from this, let's see, yeah, 29 to 24. Now, that's a lot, but what you got is you got an expansion of volume. So what I expect you're going to see coming into this closeout here is that you're already into the bar of 2027. Once you get into that bar 2027, folks, what that did is this. That put game on for 2018, which is pretty intense. Because my take is that that's where we're going. And we're going a lot lower. You know, when I was just talking to Basil, something that you absolutely want to wrap your head around is this. This seems like a big downdraft. And percentage-wise, it's a decent downdraft. You know, the Dow's down 1.5, S&P's only down 1.1, the Nasdaq's down 1.6. The Nasdaq absolutely is not only down, but it's down on monster volume. The Nasdaq, the volume's going to explode out of this. We've already done 1.6 billion on the Nasdaq, and 1.9 is a normal deal. That's the first part. The second part, though, is a lot bigger. And the second part has to do with what I just said to Basil. And this is why we can get a $500, $600, $700 day down, which is not a big deal. The reason being is that your SPY, okay, where this wants to test, folks, is 180, 192. We're trading at 202. That's a monster number. That's a monster number, okay? And, you know, the elevators on the way down in the marketplace don't have any stops. They just go. So, you know, if you're worried now, please put your stops in. Do something, okay? Because that's where we're going, you know, and what you have out here in the S&P today is even more dangerous, and what it is this. You haven't even hit the January 16th swing low yet. The way this baby goes energy-wise is that we're above that, and we're above that by 2.5 points. It's going to jump down there. More than likely, it's not going to break it the first time, and it's going to hover above it. When it hovers above it, what is it doing? It's building cause to blow it away. So it's a dangerous place in the market at this particular point. And guess what? That's what stops are for. You know, bottom line, get them in. We take a look at some of the high volume stocks out here, and what we did have is that some of these are just getting taken apart. You had Microsoft, of course, down to $4.30. Apple's off $2.72. Let's go over and bisect and dissect Apple. Apple's going to be coming out with numbers. Let's see what they got to say. You know, bottom line, we take a look at Apple out here. It's trading at $1.10. Let's put this on a... So what do we have with Apple? Now, this is so dangerous for Apple, it's 6. So check this out. Apple, folks, I got to show you this. This is intense. Hey, we're going to know, and we're going to bisect and dissect Amgen also, because that's coming out with numbers. Amgen, to me, is going to fall apart after the close also. So check out Apple. As we go to Apple, I'll press the button. What do we have? October 15th. October 15th, high volume swing low. You're at 110 right now. Guess what? The high of that low is $99. The low is $95. That's where this thing wants to trade. And this will be serious business, Apple, if in fact we get there. The reason being is that for folks that buy breakouts, you know, bottom line is that when that thing broke over 101 to 103, October 21st, that's a big breakout, you know. And then what it has with Apple, and this is where I'm going with Apple too, by the way, and this is really dangerous. Apple had volume off the high. When Apple came off its high on December 1st, monster volume. You never want to see volume off a high. What volume off a high indicates is a much larger correction, and what it also indicates is that large funds are getting out of it, and what happens is that they don't buy on the way down, and they basically continue to sell on the way down. So that I suspect, you know, and we'll find out. I believe Apple comes out at 4:30. They're always a little bit late. Not late, but that's when they come out. Amgen, AMGN. So let's look at Amgen. Amgen, of course, biotech stock, been hanging up there in a big way. It's trading out at 158.74. This, okay, so first we hit a high, December 8th. That high was generated out there with 3.9 million shares. We hit the second high. Ooh, this is dicey. 171.73. Oh, watch this. Oh, this is, okay. Oh, I can't wait to see this one come out. This is why. So watch this, folks. This one is so subtle, it's sick. Now, all I do is price and volume. You know, that's the out of time of trade. That's all it is. So over the course of years, if you have my book, you know that markets talk, walk, and squawk at swing points. So the swing high on this is 173.14. That was generated on December 8th. 3.9 million. Watch what happens. Then we come off that high, and we make a low. And we make the low with 4.4 million. So your correlation goes like this. You had a high volume? No, you had a low volume high. You come off the high with volume. Now watch this. This is tricky. You go back up, and we have monster volume. We have 7.8 million shares. But what does it do? It can't take out its high. Okay? So what does that mean? Well, as it's doing that, it doesn't mean a thing. Because it would be like, I mean, I've done this a million times, so to me, it means something. But and what that means specifically is that there's a big problem here. But I still wouldn't short it at that point because it's like, okay, you still don't know. But watch when you do know. It hits the high, right? But it doesn't take it out. They can't take it out, and you have expansion of volume. Then what ends up happening? Bingo. It goes from 171.73, and then it comes down to 154 2 days later with monster volume, 7 million shares. Do you still know anything? Yes, you know that you have a monster seller in it now. What do you wait for? You wait for a counter trend bounce again? Guess what? You got it. It goes higher. It goes to 164 again, and it does it with 1.7 million shares. Okay, so what does that set up? Now, then what you do is you're going to take that and you're going to put that on a weekly. Because when you put this on a weekly, it's actually pretty scary to short this at all. Because all it's actually doing is coming back into its sign of strength. And when you put this on a weekly, you're going to see the 2 weeks had monster signs of strength. October 20th, the week of October 20th, stock goes from 133 to 148. Next time it goes from 148 to 164. We know we're trading at 159. So the way you do this is you say, okay, 159, you're into the bar from 164. Where's it going? Guess what? It's going to 146. Now, this equity here very well is just a correction in a market that does want to go higher. But what you're doing is you're coming back to the breakout area. So when this thing comes out with numbers, my take, we're either hitting the 146 or it'll go all down to 133. It's gonna be a big number on the way down. Apple's gonna be a big number on the way down. That is gonna basically set up a nasty slope after the market and tomorrow morning. Now, what we also have is this. You have the Fed meeting that started today. At 2 o'clock tomorrow afternoon, you're going to have the Federal Reserve come out with a statement. The whole world, at this particular point, is still waiting for the Federal Reserve to go up in rates. Bottom line, folks, we have the 10-year trading out at 1.8. Market's going south. Let's go over and take a look at that bond market. Bond market out here, if we take a look at the 10-year, 10-year did 1.1 million contracts out here today, and she's not backing off. Ooh, this is interesting. So check it out. The 10-year got to 130.05 today. Right now, we're at 129.23. She's done 1.1 million contracts. Bottom line is that you're building monster cars for higher price. If we go, and we've done this quite a few times. If you look at the TLT, which is the ETF structure for the 20-year plus fund, the ETF itself, folks, has already taken out a B point of an ABC structure on the way up on a monthly basis, and just blew it away. I mean, blew it away. You know, so bottom line is that says, number one, more than likely we're going to see a shocker in the statement maybe tomorrow, and that shocker would be, I can't picture that they're going to say that they're not going to go up in rates this quick. They're not going to flip it like that. There'll be some other type of language in there that the market will pick up that, guess what? Rates are not going up, dollar pulls back. What happens to gold? Gold, folks, is an ABC structure on the way up. Some of the gold stocks are taking their B points out today, taking them out with volume. A to B equals C to D. Gold and silver's going up. You stay right there, folks. We'll come right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien. Welcome back, folks. Dow Industrials right now down 281. You get the NASDAQ down, let's see, she's down big. You get the NASDAQ down 83. S&Ps are off 28, and you can just expect more selling coming into this close out here. If we go over to the IWM, now this is a little deviant, okay? This IWM, which is the small caps, folks, okay? We put this on a daily. We take a look at it. What you're looking at here is this. It looks that it's holding up. In fact, what the IWM is doing, let me bring this back a little bit more so you can see how this is setting up right now. The IWM actually is trying to get to a higher level with lighter volume. We've done 23 million shares out here today, and this is really cool watching how this shakes out. So watch what you have here. You have an aspect that on the 13th of January, the IWM got to 119.39. You did 49 million shares. Today, we got to 119.25. We did 23 million shares. That is so dangerous it's sick. See, you're trying to get to a higher high, and you have a contraction of volume. That's just saying, bye-bye, see ya, don't want to be ya. First place you're going to be down is the 6th of January, which is a 114 area, but guess what we have out here? 103.54. Which is the October 15th swing area. That's game. That's game, and you know that's how this baby, I suspect, is going to be shaken out. So it's going to be wild watching that as that does shake out. In fact, if we go over to United Technologies and you want to see that correlation inside United Technologies, now UTX, okay, no doubt, you know, nice day out here. Bad day, it's up 49 cents. Well, what you have with United Technologies is that it saved itself, no doubt, came down, but United Technologies has two different swing lows. You have 110. That 110 area is sticking out from the January 6th area, and then the infamous October 15th area down at the $100. This is going to be nasty, folks, when this thing basically just breaks apart. And my take, by the way, is that it's breaking right now. And what you do have, there's absolutely zero fear out there. And when you're coming down and there's zero fear, what does that do? The market will go down until the fear comes into the marketplace. And there's zero fear. You're down $300 and there's zero fear. Let's go to Tom in Tampa. Hey, Tom, what's going on?
Hey, Tom, how you doing?
I'm doing great, man. You having a good day out there?
Yeah, sure am, man.
Cool. So what are we going to look at today?
How about SDR, Sam David R.?
Sam David R. Let's take a look. This is a Sandridge, Mississippi Trust. It owns royalty interest in producing oil and gas wells. Okay, and let's see.
That's a heck of a dividend, Tom. It's like 32% or something crazy like that.
Yeah.
They pay that quarterly.
Don't buy this thing, man, because they'll stop that dividend. So if we take a look at this, it's SDR. And when you pay a dividend, folks, that's 30%, okay? Forget it. It's not going to happen, okay? SDR. So we pull up SDR, and this equity here, what you're going to see is that I absolutely let it test this 360 first, Tom. See that 360 high volume swing low, December 31st? It's going to get tested.
Okay.
And, you know, I wouldn't step in this thing. I mean, what you're going to see is that the dividend itself, let's see, is just, you know, it depends what morning someone's going to wake up, that dividend's going to be gone. No one pays a 37% dividend.
Okay.
Cooking, brother. Have a great one, man. Have a safe one. When you see large dividends like that, folks, okay, they get basically sliced and diced, and it's over. If you go to CLF, this was this year's right. This cut its dividend yesterday. This is Cliffs Natural. It's trading at $6.81. It had a dividend until yesterday. It was a big dividend. Guess what? The stock itself not only basically came down. the stock, the last leg down, took it from $102 to $6.80, stopped paying their dividend. That's what happens. You know, when the dividend is supposed to come out, bottom line, before that area, and that's just a common sense type of deal, too, by the way, folks, okay? You can't expect to get even dividends of anything above even 7%, 8%. Well, maybe you can push 10% on some of them for quite a while. But bottom line, you get some with 37%, just get out of the way. Volume-wise, as we're coming into this closeout here, let's take a look at it. We have the Dow. So the Dow is going to run about 750, 800, which is not bad. NASDAQ, different animal, though. NASDAQ is going to get some numbers. NASDAQ is already at 1.759. That means the NASDAQ's going to come at $2 billion. And after the closeout here, the big numbers, Apple's going to be a big number. That's down 340. It looks like Apple, they're going to toast and roast. Amgen, AMGN. We'll see where Amgen shakes out. Amgen, also to me, looks like it's going to go dramatically lower. So you can expect some high volatility coming into this closeout here. Gold. Gold equities, folks, are doing ABC structures on the way up. Nice run out here, no two ways about that. We take a look at, if you want to take a look at Anico Eagle, this is basically it's an ABC structure, and then what you have is that you're basically overtaken, you know, the structure that's going back. There's a swing point up here at the 33.25 that it's overtaken. That's going to send these equities, you know, up to like an equal up to 42. It's going to send them up to the July 2014 area, which is a big number. So what I'm expecting too, I'm expecting this pretty quick. The reason being is that a few of them have moved into the swing points, moved in with volume, have the force, have the wide price spread, all of the above. And, of course, King Dollar basically has come off this high. Now, we'll see whether King Dollar gets followed through tomorrow. Thus far, what King Dollar has done is this. King Dollar has done, I think it was 55,000, 56,000 contracts off the high. That's not bad. It's not, that wouldn't be considered high volume. You get 60,000 contracts, though, tomorrow, second day, and you're down, that's going to be high volume off the high. If you do look at the UUP, what you're going to see, that's the ETF structure for it. What you have with the UUP is that the UUP is at $24, and it looks to me like that thing wants to get out at $22.86. And that doesn't sound like a long way down, but the way the UUP trades, it's very slow. That is a long way down for the UUP. So that is going to be a big number. And my take is that it's all about this dollar, which is really wild. But and it's too late for the companies, meaning that dollar goes south, for some reason, market's going to go south. This is Tom O'Brien. This is TFNN. You stay right there. We're going to be coming right back with some numbers for you after the close. Dow Industrials right now down 285. The Nasdaq's off 90. S&Ps are off 30. Gold's up $14.90. $15 now. Silver's up 12 cents. We're going to be right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Sam in Irvine, California. Hey, Sam, what's going on?
Hi, Tom. How are you?
I'm doing great. You having a good day out there?
I'm having a great day. Thank you very much. I want to preface by saying that I'm so grateful to you and TFNN for you to assemble such a great people, such a team to help the small investors like myself.
Well, we appreciate you growling and prowling out here with us, Sam. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote is by Marlo Giovanto. Be strong. Go with your heart and believe in miracles because anything can and will happen. Market-wise, let's take a look at it out here. We had the Dow Industrials down 291, NASDAQ off 90, S&Ps off 25. Gold contract up $15.30, trading at $1,294 an ounce. Silver up 13 cents at $18.11. Platinum up 12 bucks at $1,264 an ounce. Copper gets smelt down 8 pennies, trading out at $2.46 a pound. Light sweet crude up 87 cents at $46.03 a barrel. Bonds, you had the 10-year up 7 ticks, 129.23, building cause for higher price. 30-year up 4 ticks, trading out at 149.23. Bottom line, doing the same deal. King dollar down 855 ticks, trading out at 94.26. That came off the high with 55,000 contracts. We're going to look for a follow through tomorrow with actually about 60,000. That would be volume off the high. That would be saying the dollar has topped out. Euro up 137, trading at 113.76, and the yen is down 62 at 117.84. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. We take a look at the future out here. What you have with the future is this. We are trading right now at 2029. This little baby out here, what we had intraday is that you came down, you had an expansion of volume on the way down out here. Well, I suspect we got a counter trend bounce intraday, but guess what? That counter trend bounce was with lighter volume. We're at 2029 right now. Yes. We're going to get some action the next few hours out here. Yahoo just come out with numbers. Numbers were good on Yahoo. Yahoo closed out here at a price point of 47. She's trading at 50. You can expect this thing. I expect this thing is going to be all over the place. If we go take a look at the SPY, the SPY, what we're looking at in the SPY is this. Why is this slow? Not quite. Okay, let's go take a look. 1 second. First, we take a look at the SPX. We take a look at the SPX. This is what you have with the SPX. SPX got down to a price point today of 2019. We're at 2020. Bottom line, you have the swing point that it wants to go after on the 14th, which is 1988. You have the swing point on December 16th, which is 1972. And then the monster that it's going after is that October 15th swing point of 1820. It's a big number down there, and I suspect number one, it's not only going to go after it, but it wants to go after it with a vengeance. We take a look at the inside the Dow Industrials, what we had out here inside the Dow Industrials today, bringing it down. You had Microsoft was the main mover on the way down out here today. Microsoft had brought it down. Microsoft was down 435. You had Caterpillar. Caterpillar was down 618. Intel was down 162. You had Cisco off 107. The only Dow stock that was positive out here today was United Technologies. That was up 41 cents. So let's find out what we get. Well, actually, let's go over to the gold contract next. We take a look at the gold contract. What we have with gold. Gold contract out here. Whoops, there she goes. Nope. Gold contract, GCG5. Gold contract trading up $15. We got to a price point today of a $12.72. It's at $12.94. Gold contract looks like a very large ABC structure on the way up. What we're going to be looking for as it gets into this 1307 area is 215,000 contracts. You get 215,000 contracts as we get into that area. What you're going to end up seeing is a very large ABC structure on the way up. Yahoo, let's go over and take a look at Yahoo. Yahoo come out after the close. Numbers on this, Yahoo closed at $47.99. That had been down $1.45. Right now it's trading up at the $50 mark. The high on Yahoo is $52.62. And with Yahoo, the bottom line number was 30 cents. They made 30 cents. Yahoo is going to put the Alibaba stock into a separate company and spin it off to their shareholders. That's a nice deal. It will be a separately traded public company. What's really wild about that, folks, is that so it's going to be a separately traded company. It's tax-free, and that all that's going to happen is that whatever Alibaba's worth, that's what Yahoo's going to be worth, which is pretty well, the separately trading company. Amgen, Amgen just come out with numbers. Amgen closed at 158.89. That is trading out at 160. And that's not enough juice for Amgen. The biotech folks, when they come out with numbers, no matter what these numbers say, bottom line should be up a lot more than that, and it's not. Their sales was 1.17 billion. That was the estimate. The sales came in at 1.18. Oh, that was just for one drug. Interesting. Let's see, what's their full sales? Let's see what they have to say here. Okay, so revenue. Oh, this is big. Revenue was, the estimated revenue is 5.20 billion. They come in 5.33 billion. They got all their drugs listed down below there. Big numbers, no doubt about it. The bottom line estimate was 205. They came in with 216. It's not moving the stock. Stock right now is trading at 160.24. The high of today was 160.79. So bottom line is that it's going to need a lot more than that to get to higher price. Bonds. We take a look at the 10-year bond. What do we have with the 10-year bond? 10-year bond is building costs for higher price. TY. Bond market out here today, we're up 6 ticks. You did 1.1 million contracts on it. The high of October 13th is 129.28. We're at 129.22. This little baby looks to me like wants to go to a much higher price. The yield is 1.8 right now. We take a look at the 30-year bond. What we have with the 30-year bond, 30-year bond is hanging at these highs. We did 283,000 contracts today. Now, the 30-year, no doubt, is going to need bigger volume. You know, we're hanging at the high, but the 30-year does need bigger volume. That's the way that thing is setting up right now. King dollar. Now, let's go over to King dollar. What King dollar's done is this. It's backed off the high. King dollar right now traded down 860 ticks out here today. We did 56,000 contracts, which is not a huge amount. It's an expansion of volume, not a huge amount, though. So right now, we are at 94.26. We'll see how it runs into this 92.67 area. The 94.26 area where it is right now, if we bring this all the way back, we put this on the continuous contract, what you're going to see is that what this has been spiking, you need to close this week. We need to close under, in order to have a fail, you need to close under 92.53. Yeah, 92.53. And right now, we're still 2 points over that. Well, 1.75 over that. That would be the number. And if that's what you get, that would be basically a spike high. It spikes up to this 95.85, then gives it up, and basically gives it up in spades. What we will have, Apple's going to be coming out with numbers. Apple normally comes out with numbers, comes across the tag with numbers at approximately 4:30. In fact, I think they say that. Yeah, 4:30. Apple comes out with numbers. And the way Apple is set up, folks, okay, if we take a look at Apple, Apple looks to me like, number one, what is sticking out like a sore thumb is 103 to 93. That is the swing low from September 9th. And, of course, the October 15th high-volume swing low is $95. So $95 is game. And, you know, this high-volume swing low in the markets is crucial to wrap your head around. The reason being is that if we just go over to Microsoft, we take a look at Microsoft, what you're going to see inside Microsoft, Microsoft not only went after that area today, the amount of volume on Microsoft as it was going after that level was incredible. We did 168 million shares. The high volume swing low is 42.10. We hit 42.10, and that was at 60 million. Microsoft's going to blow right by this. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. Today's Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow finished down 291, NASDAQ off 90, S&Ps were off 24. When you take a look at some of these stocks that got hit hard, folks, what you have is that they not only came down with volume, but they also are going after this October 15th swing point. If we start with Microsoft, you know, Microsoft gapped down 10%. That's as intense as you can get. You know, Microsoft off its high of 50, you're at 42.66. Huge volume. We did 168 million shares, folks. The high volume swing low only had 60 million. Price exactly the same, though, which is pretty wild. How the heck does that happen? When you hit a high volume swing low, though, and you get a higher volume swing low, that's why you wait for it to get tested. It's going to blow right by it. This is like going to be like a magnet for Microsoft now, making its next spin down into this 33 area. Okay, so it's a huge problem inside a very large cap. That's a large cap inside the Dow Industrials, as well as inside the NDX 100. I can make a case in a big way here that Microsoft is going to be making its way down. And if you want to see when trend lines get broken with wide price spread accelerated volume, Microsoft has it. So $36.29. That's where this baby wants to get into. We go take a look at the Procter & Gamble PG. These ones in the Dow. This basically took the Dow apart out here today. Procter & Gamble was down $3. Not that that's a huge amount either. It's not. What is huge? 14.3 million. We take a look at 14.3 million. You take a look at the high volume swing low. It hasn't hit it yet. That high volume swing low is at 81. You know, Procter & Gamble came off 93. We expand this out a little, and what you're going to see is that Procter & Gamble wants to make it down to this 85 area. Procter & Gamble is also really dangerous because what you have is this, and many of them go like this, okay, is that they broke out of the 2013 highs. It was consolidating. Did it with light volume. Made a high with really light volume. Microsoft made a high on a weekly basis with 18 million, no, Procter & Gamble, 18 million shares, then came off that high with 34 million shares, 30 million shares. Thus far this week, we've already done 29 million shares. That's a huge problem, folks, okay? When you do something like that, you're not only going to basically come down fast, okay, but what you have inside that context is huge losses very quickly. You know, Procter & Gamble, Microsoft is one of the biggest ones, meaning how fast it went south. In fact, I can't, I want to pull this back for a bit because I can't remember the last time Microsoft gapped down 10%. You know, and that's one of those situations that, you know, oh, there it is right there. Okay, we can find it. Okay, so Microsoft had gapped down July of 2013. The stock was at 35, and then it opened, it opened to 31. That doesn't seem as, I guess, doesn't seem as bad from 48 to 42, though, right? 46 to 42. Bottom line is that that's where all of these going back to. Now, if we go over to the SPY, we had brought up the SPY, you know, a few weeks ago, and we were showing how the breakdown has occurred, how the SPY and the S&P had then got back inside its range, meaning higher. Now I want to show you just, you know, that you're still in the lower range here. So when we take a look at how we've traded, what you're going to see is this. Right now, we're at 202 in the SPY. My take, we're going to get down to 1550. So that's a 1550 S&P. That's 25% from where we're going, which is pretty intense, no doubt. When we broke down in October, we got down to 181. You did it with huge volume. If you happen to be watching Tiger TV, you can see the volume spikes. If you're sitting in your car on the road to hell from Route 128, be safe, please, okay? Because I know how bad the weather is up there. Anywhere else in the country, also be safe. Bottom line is that when we broke down in October, you had the high volume swing low. That's what everything's going after. Then what ends up happening? The market made it back inside its upper channel. As it made it back inside its upper channel, though, what had happened is that the volume died in the vine, really died. Then the week of December 19th, you broke the channel once again, but as we broke the channel, it refused to stay down there. Then what ended up happening? Well, we broke the channel January 9th, and we haven't got above it since that point. Tried last 3 weeks to get back inside the channel. Hasn't been able to get back inside the channel. What does that set up? That sets up much lower price, number one. We'll see how these tests get done on the October 15th swing points. Those swing points are crucial. After the close out here, the numbers that we have thus far is this. Yahoo is the winner. Yahoo closed at $47.99. That's trading at $51.48. What they're going to do is that they're going to spin off Alibaba shares to a publicly traded company. They're going to keep the Yahoo Japan going. Bottom line, that is a nice deal for, because that's a tax-free deal. That is absolutely a great deal for the shareholders. Amgen come out. They beat their numbers. Can't get any traction going. Amgen closed at 158.89. It's trading at 160. The big one out here is going to be, well, as soon as we come back from this break, okay? Actually, it's going to be in 3 minutes. Apple. Apple closed at 109.14. We are down 396, and we'll see exactly if Apple can perform or not. The way I'm looking at Apple, Apple came down off its high, expanded volume. That first shot to the downside was December 1st. Bottom line, it wants to go after its lowest swing point. So Apple's going to be the number for the NDX tomorrow. The yin and yang of it is going to be Microsoft is what, basically started it off today on the way down. And, after the close last night, folks, Microsoft wasn't that bad. It was down a point. Whatever happened overnight, who knows. But what Microsoft does have, was that high volume swing low on the daily, on the weekly, on the monthly, all of the above of $42.10. And guess what? It went right after it. When you put this now on a weekly, and we're only into Tuesday of the week, it's a disaster. I mean, this thing is, if you happen to be, watch this, if I put this on a candle, a council charting deal, you're talking about just a huge bearish engulfing that it has basically taken back from July 18th. This might be 3 black crows. And with 3 black crows, folks, we'll see, in fact, if that's the market. Let me just look at something, because I think that's what we had actually in the market. And what happens with 3 black crows is that it's a bearish occurrence, but what also happens is they like to be tested, and then they fall apart. Yeah. What's funny is that we actually, the first ones that started December 10th. December 10th, you had 3 little ones. You went and tested it again. And then on December 31st, all the way down, you just tested them again. Pretty wild. You stay right there, folks. We're going to be coming back with Apple's numbers. The Dow Industrials closed down 291. NASDAQ off 90. S&Ps were off 23. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. results. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Apple just came out with numbers. Apple closed at 109.14. It's trading up $5 right now at 114.33. Bottom line is that's not enough, folks. It should be up a lot more than that because these numbers are impressive. Bottom line, though, the juice is not there. Numbers go like this. So their gross margin, the estimate was 38.6%. They've made that 38.5 to 39.5. Earnings per share, estimate was $2.60. They blew that away. They made $3.06. Their revenue, $67.5 billion. They blew that away, $74.6 billion. Their gross margin is profit, 38.5. They made 39.9. iPhones, the estimate was 64.9 million. They sold 74.5 million. The iPhone ASP, I'm not sure what that is. That's was that the clock, the watch? They broke it out. Who knows? That's only $668. iPads, estimate was 22.1 million. They took in 22.4 million. iMacs, estimate was 5.5. They took in 5.5. The conference call is going to be at 5 o'clock That's my man, Dave White. It's a beautiful thing. Average selling price, ASP. The estimate was $668. It was $687. So they closed at 109. Right now, you're trading at 114.75. And bottom line is that, what does that mean? That means you're going to trade lower, folks. 114.77 is their last swing point that was out here on December 29th. You know, that's where we came off the highs, too, by the way. We came off the high of 119 down to 111. So whatever's in there, for some reason, when you look at that on a fundamental basis, there's no doubt those numbers are superb. Bottom line, people are not buying it. You know, $5 is good. It's better than going down $5. Bottom line, though, you're going to see that that's not enough to sustain that price level. You know, I suspect people will start scratching their head saying, how can you come in with that kind of number, beating with that kind of number? Because it's a big beat, folks. And in fact, you know, you're still selling. Well, someone is in there selling away. That's how you basically read that baby. Excuse me, folks. Amgen, AMGN. So these are the ones that come out with numbers thus far. Amgen come out with numbers. They closed at 158.89. That stock is trading at 160.60. Yahoo. Yahoo's the big winner out here today. Yahoo closed at $47.99. That is trading at $51.91. What that's all about, that is about spinning off the Alibaba shares. The Alibaba shares are going to be a separate publicly traded company. Good deal for shareholders, no doubt about that. Apple. Apple's the last one that just came out with numbers here. Apple closed at the 109. That's trading at the 117. What is going to be interesting, one of Tiger's in there saying, you know, buy Greece. So check this out. This is going to be pretty wild how this shakes out with Greece. Let me get this article again, because in Greece, of course, you just got a new government. And, okay, it's not in the top news anymore, but this is what's going on. So you have the European Union, folks, that we're putting sanctions against Russia. European Union are putting sanctions against Russia. And what happens inside the European Union is that there's 29 members of the European Union. Well, what happens is that all of the members must agree to a policy. So what you had happen out here this morning was that the bureaucrats, the folks that are running Greece now, came out and said, hey, listen, you know, the European Union said they're going to put more sanctions against Russia. Greece came out and said, you know, bottom line, you can't do that because you didn't ask us, number one, and we didn't agree to it. Now, is this all about Russia? No, it's not all about Russia. This gets good, folks, because the prime minister right now of Greece was a former communist. Not that makes a difference, by the way, okay? Because, you know, you get a lot of socialists over there, communists in Europe, and that's just how it is. But what this is about, which is really cool, this is going to be about putting the pressure on Germany and putting the pressure on Europe to tell them to go take a hike with their debt. That's what this is really about. And, you know, my personal take is that they should tell them to go take a hike anyway. Because what you have out here, they don't need the euro. Greece is not going to change, folks, okay? They got a great country. Bottom line is that they've been getting supported forever. And guess what? The European Union is going to have to support them. That's what it comes down to. So we'll see how that whole thing shakes out. What that is going to do, though, okay, that is going to put high volatility into policy over in Europe. It's going to drive the European Union absolutely up a wall because the way that the mantra has been, or the public relations has been, is that, if you remember a couple years ago, Merkel continued to say, hey, we're not going to let Greece do this, we're not going to let Greece do this. Guess what? Well, Greece turned around and said, hey, we're going to do it. Then what ended up happening is that the leaders in Europe start backing off because they realized once Greece pulls out, and if they went back to their, I think it was the drachma, they'd be 10 times better off. That's the reality. the European Union is going to freak with one country coming out, because then they're going to realize that, oh no, these controls are off. So we'll see where this whole thing shakes out. What that will do, though, that's going to keep high volatility inside the currency markets in spades. You know, we had out here today, you know, the large companies were claiming that this is all dollar related. You know, Procter & Gamble said, you know, they always hedge on a continual basis. If you heard the CFO this morning, he says, okay, listen, the dollar went up so quick that we just couldn't hedge, and that's what they're blaming it on. They're always going to blame it on something, folks. The bottom line is that these equities have been to higher highs, no volume. There's been distribution going on. There's always something that starts this run to the downside. You know, what you do have is that you have high volume swing lows at the October 15th level. That's where they want to go. Now, let's talk about something that wants to go up. Gold. We go over this gold market. We go to the XAU. And this is totally different than the downdraft in 2008. And what it is that in 2008, of course, everything went down. Well, the gold and silver equities, folks, had been down forever. They came off the bottom, and they came off that bottom on November 5th. We're at 81 right now in the XAU. XAU has wide price spread, accelerated volume, all of the above. We're at $81. This XAU looks like it's going to make a run for this 104. It's a big number. It's a big number. There's no two ways about it. So that's the XAU. HUI, Gold Bugs Index, same setup in the Gold Bugs Index. It had the wide price spread today, had the volume come in. HUI has just gone from 146 to 206. We've got over the swing point out here of the 202.23. That was the swing that was on October 8th, and we did it with volume. You know, we took that baby out with 30.9 million versus 29.8. What does that set up? That sets up a run up to this 250 area. So what I do expect you're going to see, and this is where this is going to get really wild, as to, number one, what is the difference? Why are the gold running? I suspect what it has to do more than anything is that you have negative interest rates in Europe. You have, well, negative interest rates is enough. You know, the gold market is so strong, small, folks. You don't need a lot of buy-in inside the gold market in order to get the higher price. And could you just imagine, this absolutely blows my mind, but can you imagine that you have to pay someone in order for them, and instead of them paying interest, you are paying them to keep your money in either their bonds or their bank. As of yesterday, there's $4 trillion. That's with the T. There's $4 trillion in bonds that have been traded, that are traded, at a negative rate. So that means that if you and I issuing a bonds, picture this, folks. This hasn't happened in the United States yet, but it's happened in France. It is happening in France, Germany, Switzerland. If we issued bonds, let's say we're over there, we issue a bond. We issue a $100 bond. And the person, normally we would turn around and we say, okay, we're going to pay you. Like right now, at the Tiger Real Estate Fund, right? We issue first mortgages, right? We pay the investor 5% on a yearly basis. It's paid monthly. So that's what we have to pay. They're secured. We do a 70% of the assessed value. Okay, so it's more than that. 70% of the assessed value. So the investor, if it's $100 grand, they're getting paid $5,000 a year, $416 a month. So that's how it normally would work, right? So now picture what's happening up in Europe. And Europe, what's happening, if we issued a $100,000 bond, the investor would turn around and pay us $20. That's what it is. It's $20 to $30. That's all it is. But guess what? It's amazing. I mean, wouldn't that be cool? No, it wouldn't be cool, folks. That's when you have a real problem. There's a problem. Now let's go back to gold. Why would you pay someone? They're gonna buy gold. That's what's going on. You stay right there, folks. We'll come right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Welcome back, folks. Dow Industrials finished down 291. You had the Nasdaq off 90. S&Ps were off 17. Actually, they were off 27. Right now, they're only down 17 at 2036. After the closeout here, Apple was the big one. Apple come out with numbers. They hit great numbers, folks. Bottom line is that doesn't have any traction. Apple will have a conference call at 5 o'clock Eastern Standard Time, which is in 9 minutes, rather. Apple's trading up $5, but $5 is nothing when we were down $4 today. And with the type of numbers you had, my take is that Apple's going lower and a lot lower. Amgen come out with numbers. Amgen closed at 158. That is now trading at 158 again. So Amgen also can't get the juice. They had decent numbers too. Yahoo's been the winner out here. Yahoo closed at $47.99. It's trading at $51.90. They're spinning off Alibaba as a tax-free company, and it's going to be trading publicly. So inside the separate company, all you're going to have is Alibaba shares. It's pretty cool, actually. Yahoo is going to spin off Alibaba. Yahoo shares jumped as much as 10% after the web portal announced a tax-free spin-off of its stake in Alibaba Holding Group, seeking to maximize the return to cash to shareholders. The deal will put Yahoo shares in the Chinese e-commerce company, a newly registered firm called SpinCo. I love it, which will own all of Yahoo's 384 million Alibaba shares, valued at $40 billion. How cool is that? Bottom line, smart way of doing it. Not going to pay any taxes, and the shareholders basically got what they wanted. And that's a huge. You talk about a dividend. That's a sweet little dividend. Pretty amazing. Next up here, this is what we have. Ethan Allen, the ETH. This is amazing that these guys are still in business, actually, because after that real estate downdraft, there's a lot of companies that went out of business. Ethan Allen, that closed at $31.65. That is trading out at $28. Let's go take a look at this. This run here, this just went from $22 up to $33. We take a look at this, and we'll put this on a 2-year weekly. Yeah, she's going to trade back into where she had some strength. She had zero volume up here. This is typical. You had a high of 2013. That high was $32.21. You had 3 million shares traded up there. Guess what? We just went up on one. That baby's going to be pulling back down. WDC, Western Digital. Western Digital closed at $97.63. That is trading at $99 and $100. Numbers like this go on Western Digital. Earnings per share, $1.93. The revenue is $3.9 billion. EA, let's go take a look at Electronic Arts. Electronic Arts closed at $48.41. That now is trading at $50.19. Numbers go like this on Electronic Arts. Estimate was $910 million. That's interesting. They didn't even make it, and it's trading up. $830 million they made. Let's go to Sam in Philly. Hey, Sam, what's going on?
Hey, Tom, how you doing?
I'm doing great, man. How you been?
So we survived. We got half a foot instead of 2 feet.
And isn't that cool? Oh, that's awesome, Sam. That's
absolutely.
Yeah, huge, no doubt.
I'd like you to look at Harmony Gold.
Let's take a look at it. You get Harmony Gold, folks. It's a large gold miner out of South Africa. The low for the year is $1.53. The high is $3.80. This equity has just gone from a price point of $1.59 up to $3.14, and it looks to me like it's another ABC structure on the way up. Let me bring this back just a little bit more. We happen to own this equity too, folks, just so you know that. Now, do you own this? You're looking to buy it. What are we doing?
I own it at $250, and I'm waiting to see what's the volume when it reaches like $370.
Okay, so what you have is this. It's what it's going after, and that's where I believe it's going after also, folks, is the March 14th swing high. That's $3.80. Now, what has happened thus far, Sam, is this. This is one of the first equities that came off the bottom nice, first off, right? I just put this on a weekly, and what you're going to see on the weekly, folks, is this, is that nice expansion of volume. You know, the first week, January 9th, we went from 196 to 261. It did 25 million. It followed through with 27 million, got higher with 15, Thus far out here in 2 days, we've done 7. So you can see we've done 7 million in 2 days, which is really cool because bottom line is that you get up to 15, 20 million. You get an ABC structure on the way up. And what's sticking out like that sore thumb is that 380, which is the high swing point from March. But what's also out there where I think this is actually going right now is that 427. So start keying on the 427 from September 20th. Now, what will happen is this. So check this out, folks. This is pretty cool to watch how this shakes out. That level there, what had happened is this. Volume had come in the stock, September of 2013. It goes to 427, but it can't hold price. The bottom of that 427 is 350. So as you just said at the beginning, Sam, you were going to watch that 370, okay? What we need is that as you get into that 350, the bottom of that, we need volume coming into that. If it comes up to the 350, and then it has light volume and it backs off, that's the sell right there. Because what would end up happening is that because it's such an extraordinary run, I mean, 150 to 350 is big money. That's $2, right? So that would be the sell, and that would be bearish, and that you get a pullback. It doesn't mean that it's going to the bottom. It'd just be a pullback. I think it would just be a pullback into strength. But you'd want to sell it, folks, okay? Remember something. The gold and silver equities, you always want to be selling. Don't hang there when they're up 30, 40, 50%, okay? That's the first one. Now, the real bullish scenario would be if the volume stays like it is right now, which is good, big volume, and you get into that bar by like about 35, even 20 to 30 cents. You get into that bar by 380, oh baby, 427's coming at you, man. And then that would be a different ball game altogether. The reason being, folks, is that what had happened, and this happened with many of these gold equities, if Harmony gets over that level, oh man, Harmony would be at $10 very quickly because it went down very quickly from 1074 to 342. It was just a one-way ride on all these gold and silver equities, folks. You know, so as you get over them, bottom line is that you can expect those expansions very quickly, if in fact they're trading like they are trading now. If we look at an AEM, an Eagle, you know, this came off the bottom of $22. You're at 34. I don't think this thing's going to stop until it gets up to that $40 level.
Yep.
Cooking, brother.
Perfect. Thank you.
Have a great one, man. Have a safe one. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it. Take ownership of it and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking to you right here. Don't forget that Apple calls at 5 o'clock. Have a great one. Have a safe one. Go get them, folks.